Hey, Zach.
Yo.
Lesson time. Come over here.
My favorite. We got.
Come on. Okay, so remember the PDF that we shared? We shared yesterday?
Yeah.
With everybody. So the trade continues to move in our favor, and the options that we're trading for $1.85, these things are now trading for $3.30. So for clients, anybody who would have invested $1,800, that's now worth $3,300. Pablo and I both think this is just the start of this move in oil. And so I called you over because Pablo posted something in our Discord. I want to make sure that you understand it. So here, July 19th, which was yesterday, the CL, the oil options, working well. Magnus here doubled his money, awesome. Talking about how they're talking about how they're managing the trade. But here's what Pablo added. The past 23 weeks of trade have seen oil close inside its implied range. So you were working on that straddle video?
Yeah.
The straddle is the implied range. So if I just open this up. So right here, this is oil.
Right.
And I'm just looking on a daily going back a year. Now the range is from here to here. And so this is what the straddle is pricing for this month.
Okay.
So back here for this month, I blacked out the starting date just to make it more clear. It starts here, and then the expected move is it could move all the way up here or all the way down here.
Okay.
It didn't come close.
It stayed pretty in between.
Yeah, it didn't. It's like didn't move. It pretty much fell asleep. So the people who sold options did really well. The people who bet for oil to go above 85 or below 57, they got smoked because it didn't move at all.
I see.
So if we go back to the Discord, the past 23 weeks of trade have seen CL close inside its implied range.
I see.
Right? So this week, which happens to be the first week of the monthly option cycle. Again, if I go back here, this is just the first, these are a daily, but this is the first week.
Of these bands.
Yeah, of this monthly cycle. And it's already come down and touched it. Now it came down and touched it and bounced, but that's okay. So let's go back to Discord. It's already outside of its weekly range. In just one day, the whole week's range was blown out. In 1 week, in one day, the whole week's range was blown out. So here I have it on monthlies with this tool, which we call the volume visualizer, because it lets us really just visualize what volatility is doing. Excuse me, the volatility visualizer. Got to change that. So if I open up this, now we're looking at the monthly breaches.
Right.
And we're looking at the monthly expected move. We could also look at the weekly expected move. So if I go yes, now let me just show, it'll show me when it breaches. Okay, apply, okay. And it looks pretty busy now because not only is it doing the big ones is the month.
It's
also doing the week.
People don't have access to these bars?
No. This is something that Pablo had to build because what we're doing is taking the straddle prices from the options and bringing them out into this chart in the monthly data and in the weekly data.
Oh, I see.
Isn't that cool?
Yeah. So
what we can also do.
Well, like it looked crazy for the month because it hit the band, but for the week it went past it.
Yeah. Here, so I can put labels up here. And in these labels, it actually shows that it closes the monthly within 86% of the time. And in the first week, we're right down to the bottom, and it's also taken out its weekly. As far as the weeklies, I think the weekly breaches I labeled as a weekly breach is a yellow, And the monthly breach is going to be this teal or aqua or pumice
It's called blue.
or blue. So these are all weeklies.
Oh, I see.
And what Pablo's found, and I'll go back to the Discord for this, when this happens, almost 90% of the time, price continues moving in that direction. Okay? And so going back to the chart, when it's happened in the past, follow throughs to the upside, it takes it out to the upside, it keeps going higher and higher, and then here is the only monthly breach on the chart.
It went down.
It's $60 right here though. So if it's right here, 60, I mean, over time, I guess it pulled back a little bit, but I'd rather be long than short, right? It went from 60 to a high of 76. 16 points on the downside would be 60 down to 44. That's way down here. It didn't sniff down here.
Right.
So definitely I would say following through to the upside. And now all of a sudden on the first week, which it hasn't done at all in the past year, it takes out its weekly implied.
Right. So does that mean that you think it's going to continue to drop or go bounce back up?
So in the PDF that we shared with everyone, we posted on the YouTube channel, that's where Pablo shared what he called the trade of the year. July 5th, oil was trading 76 and now it's trading 66, 65. And that's why all the members are talking about, it's so sad that I don't have more, doubled my money, looking to sell some downside and lock in those gains.
Wow.
So that's why all these guys are up so much money on their oil shorts. Close one short oil contract. Now this is what happens. People start closing things a little bit too early, where Pablo and I think that this move, it's just the start of a bigger move to come. That makes sense?
Yeah.
Isn't that cool?
Yeah, it's very cool.
We finished everything that Pablo said. Pablo spitting fire here.
Spitting absolute fire.
So when this happens, 95% of the time, price continues, so extremely bearish. Now the reason that happens is because people who are short options, they begin hedging their options by selling into the sell-off. That's a gamma thing. And the yet to be educated retail traders have their stop loss orders gobbled up by price action, which just means that people who bet on the long price of oil are being forced to sell because of the big down move.
Oh.
And then the first comment was, remember the expected move. People who are short volatility are short options. People who are long volatility are long options. So people who are betting on oil not to go anywhere,
Right.
once it starts going down, they have to sell to hedge their positions because they're betting for it not to go anywhere.
Right.
So when it starts going down,
They wanna lose all their money.
they're getting longer and longer and longer. So they have to sell. Trade's working out awesome. We expect it to be quite a bit more follow through, but would you make sure that you understood this?
Yeah, I do. It seems that was like really complicated. And for some reason, I understand it.
It's a lot of it too is just going over the same thing, because just like we're looking at the expected move with oil, you do the same analysis with a stock or with gold or with anything else, and it's the same shit. It's all the same thing. So if you learn one and you got a pretty good grasp of that one little lesson,
Yeah, like I said, I understand this now.
yeah,
So this is still like the first week, and it's just like kind of staying in the middle.
yeah,
Hasn't hit its bands yet.
yeah, right. It's not like gold started off. It really hasn't done very much this month. Or let's look at it. I always try to look at things more simply to start off. So if I take out the weekly, it'll be a lot cleaner if we're just looking at the monthly, right? So again, this closes in almost 90% of the time. And since this is only going 1 year, I think there's 12 results. So one time it's closed outside of its bands.
Oh yeah. Here it kind of did.
Let me make sure that I have the labels going. Weekly breach right here closes outside.
Oh, it's still in that bar.
Yep.
Oh, I see.
here it almost did. It looked like it closed here and then reopened here. Now what I also did, just so presentation wise, and then once you start using it, you won't need this, or you'll switch it back. But you can also, this is just taking the middle points, which I took out because I didn't want it to be more confusing for the lesson.
Oh yeah.
That actually presents nicely, but once you put the weeklies on there and the middle, it gets real busy.
Yeah.
Cool.
That's great. It's cool.
Back to work.